Hello everyone, Philip from BlackBull Markets here. Just want to take you guys through a nice whiteboard wizards video. We haven't done one in a long time, and now that we've got the nice board and we're all comfortable with it, we'll start going into this. So today we'll be looking at just a basic risk management strategy, how we can kind of work on that, especially for new traders. We can kind of see what we can do with risk management, how that will help you with your trading. Now, I'll go through some couple examples of bad risk management, and then I'll take you guys through some fairly good risk management as well. So what we see a lot in new traders are these sort of things. So we see a lot of traders start to take their profit early and take their losses quite long. So what they're talking about is, you hear this all the time, cut your losers short and let your winners run. Now, a lot of new traders do the kind of opposite of this. Now, to take you through a simple example, what we're seeing a trader do is, what they start to do is they take small little profits. You got your account, you take small profit, let's say $4 here, you take about $5, and then maybe you take $2, and then you're taking another, let's say, $6 if you're lucky, you know? Well, not if you're lucky, but if you decide, okay, I'll let this run a bit longer. So these are all your winning trades. Now you've got 5 winning trades here, but now what we see a lot of people do is they have their patience with their losing trade. So this means they let the trade run, in the hopes it turns around. So eventually, I've seen this a lot happen. It's like I said, especially with newer traders, and they take this massive loss of up. You know, I've seen some crazy ones out there, but I've seen one, for example, they take a $30 loss. Now, majority of this is all run out. So I mean, all your hard work of 4 trades that you took is now blown with just one loss. So that is an example of a very bad risk management strategy. And the other one that we see is, well, this is kind of similar, but they let their trades run for a while, and again in the chance of it turning around. So what you're seeing is you're closing all these profitable trades, heaps of small little trades that give you small little wins, and then what they do is on the other side, so they got little trades coming down, trickling down into the account, slowly pushing and growing the account to the upside. But on the other side, where the trades are not being closed, they're ticking up into big losses. So your losses are growing as your winners are slowly trickling down. Now the issue with this is, when you let your losses run, your negative trades run, with any trade, open, positive or negative, you're calculating swap. Now swap sometimes can go in your favor, so you just need to check that out, but a lot of the times it goes negative, so you have negative swap being charged from you. Now what this does, it bites away, a lot of people call it the swap monster, which is also the problem with hedging, but we did a video on that, so make sure to have a look at that. So that'll slowly take away from your margin, and you'll eventually get stopped out. Now similar with this, if you let your losing trades keep going down and down and down, taking your account down and down, on paper you're making money, but eventually you're losing, and that event will soon stop you out, which means you'll stop on a negative, and all this hard work, I've seen this run for months on end, and then all the hard work is blown with the silly mistake of not using proper risk management. So a simple risk management strategy that we can take is a 3-to-1 risk reward ratio. Now you have to have this set, but we'll talk about that now. So 3-to-1 risk reward ratio. Now if you don't know what that means, so if you take a win, you're taking 3, if you take a loss, you're taking 1. Now a simple way of calculating that is, just for example, when you win you take 30 pips, or 30 pips, and if you lose you take 10 pips. Right, so right off the bat, your loss is always smaller than your winner. Now how this works is, let's take a nice clean example here. We've got our winning trades, our losing trades. So if we take, let's say for example, you know, you're going to take about, you're not very accurate. We'll take it from there, because the market tends to be mean to you and you're not very accurate. So let's say for example, we take 10 losing trades, and we take, say, about 5 winning trades. Right? So now you're on a way, I mean your losers are way much more, almost they're double your winning rate, right? So but let's calculate this now. If you stick with this risk management plan, what we have here is you have 10, you're down 10, so you're down 100 pips, right, in total. Is it? Yeah. Down 100 pips in total. But the thing about your winners are, right, you've only taken 5 wins. Now if you times that by your 30, you get your 150, right? So massive inaccuracy. Your trading strategy is not even that, it doesn't even have to be that accurate, but in the end of the day, you're still up 50, right? So that's kind of how it works. Now the issue with this is, it seems simple when you talk about it, But remember, it's a massive psychological game. We've spoken about how you can work on your psychology as well, so check out those videos. But you need to stick to this. So a good way to have it is when you take a trade, you take your entry, make sure when you have your stop loss, you set a fixed stop loss, don't touch it, just for the beginning, once you start building that confidence. And you set your take profit at a set take profit to. For example, 3-to-1 risk reward ratio. Set it there, leave it, test it on a demo account, see how it works, and you'll see by the end of the day, it might not take a while because you could have this for 6 times in a row, and you see this time, so you could have all these losses build up, but eventually you will get should turn out on top if you have this simple risk reward ratio. Now, all professional traders work this way, majority of them do it, some of the greatest do this, so if you follow this, hopefully it works. If you guys have any questions, reach out to us, we'll be happy to help. Stay tuned, trade safe.